Hello and welcome to interest.co.nz. I'm Janae Tibshirani and today I'm joined by cryptocurrency investor Scott Milat. Welcome, Scott.
Nice to be here, thank you.
Most investors would consider themselves lucky to make returns in the double digits, but the value of Bitcoin has risen by 650% in the last year. In other words, if you bought a Bitcoin a year ago, you would have paid $640. If you sold that coin today, you'd receive over $4,800. Scott, is this too good to be true?
I think the thing to remember is that if these aren't traditional currencies. This is not a traditional financial asset. This is something completely different. And the technology that enables cryptocurrencies, blockchain technology, it's a very powerful new development. And if we're thinking about currencies in traditional form, having those kind of gains is ridiculous. It absolutely is. If you were an early investor in Uber, within 4 years, you made 2,000 times the return on your investment.
Right.
So these new technologies can unlock massive value, and I think what we're seeing at the moment is speculation on that potential future value.
Right. So, I mean, this stuff is all in the initial phases, and as you're saying,
Totally.
Uber's value shot up, Bitcoin's value has shot up. As someone who's interested in this, how did you get into it, and why did you how did you seek out these opportunities?
Okay, so I went to uni, and then I got into advertising of all things. But I always wanted to own my own business, so after a few years of working in advertising, I decided to go and start looking into how do you start your own business, and that's kind of what led me into the world of high-tech growth startups, looking at what's happening in Silicon Valley and stuff, because it was like, okay, this is where the biggest opportunities are right now. And then over time, I heard about the concept of a distributed autonomous organization, which is a whole nother subject in itself. But that is only enabled through blockchain technology, and that sort of got me more interested in what this blockchain thing was. And
so
I'd heard
what is it briefly?
So it's essentially a company governance structure, which is only made possible through blockchain. So rather than having a board of directors oversee a company structure, you essentially have an agreement in place written out in a computer program, and everyone works within that distributed autonomous organization, and essentially the code itself has all the reward structures in place.
Okay.
So it's probably something that I just need to go into in a bit more detail.
Right. Okay.
Yeah,
Okay. So that caught your attention.
Totally.
Yeah.
If you're interested, you definitely do some research.
Sure.
and look into that. So that caught my attention, and I'd heard about Bitcoin, but I didn't know much about it. So I actually ended up spending a year just researching Bitcoin, because I was fascinated by it before I even put money into it. Just because to me it was as strange as it probably is to most of your listeners.
Yeah. Okay, right, so that technology really sort of captured your attention, and you can
Absolutely.
see the value in that. So that's sort of smart contracts, for example, where you can sort of centralize supply chains and that type of thing. I can see the value in blockchain technology. What I find difficult to get my head around is how the value is derived in the cryptocurrency. So normal currencies rely on supply and demand. There's limited supply, so that's how it's priced. How does it work with cryptocurrencies when you hear of people mining Bitcoin, for example, people sitting in their bedrooms mining the stuff? I mean, how do you have a currency system when that's the case?
Yeah, so I suppose the first thing to remember is in a cryptocurrency, there is always a maximum supply. So there's only ever going to be 21 million Bitcoins, and that number is fixed and won't change. And again, can go into the details of that, but not right now.
So when people mine Bitcoin, what are they doing?
So the people who mine Bitcoin are essentially providing the computing power that Bitcoin needs to operate. and Bitcoin rewards the people that are giving that computing power by paying out a small amount of Bitcoin. And now that amount of Bitcoin that the software pays out over time reduces. So we're currently at around 16.6 million Bitcoin in circulation, and there's only going to be 21 million. And after a certain period of time, that mining reward halves. So that's why we've got 16.6 million at the moment, because in the early stages, the mining reward was large. There was lots of Bitcoin going out to kickstart the system. And then essentially over time, that mining reward reduces.
I see. Okay. Right. So the other thing with the... actually, do you think when that point is reached, when no more Bitcoin needs to be mined, do you think that'll stabilise sort of price volatility? What do you think will happen then? Will it change things?
I think that is forecast to happen in around 100 years. So it's really hard to say what the situation will be when that happens.
Jeepers. So much uncertainty. Right.
Yeah.
Talking about this volatility, in recent months we've seen the price of cryptocurrencies go up and down, and that's largely because various countries are cracking down on Bitcoin. China has banned trading of cryptocurrencies. Also, initial coin offerings have been banned in a number of countries. What do you think this says about the future of Bitcoin, and is this concerning for you?
I think there's absolutely, bad news is not good for the market. There's no getting around that. But China has sort of pressed pause. There's sort of reports coming out looking that they have now kind of tightened up the requirements for KYC for a lot of exchanges, and it looks like they'll probably allow a certain amount of exchanges to reopen and continue going forward. Ultimately, the direction of cryptocurrencies, the more that some countries close down what can be done, the higher an incentive it is for smaller countries to be more crypto friendly. Gibraltar being one example, Bahrain another example, where they're being more crypto friendly because with those smaller economies they kind of need to. So I mean that's one interesting aspect of how the whether a country decides to kind of reduce the amount of activity that's happening, it kind of just increases this incentive because the demand is there.
Okay, and it is because it is international. It's like 100%. If you're sitting in China, you don't need to be doing it.
There's no national boundaries.
You can use a platform in Gibraltar,
absolutely,
for example. Okay, and I mean that sort of decentralized nature of cryptocurrency is one of the key appeals of it, and a lot of people that have taken it up at the blockchain conference I was at, they were sort of anti-central governments and anti the fact that central banks could sort of meddle with the markets. But with that central bank sort of involvement is regulation. And cryptocurrency seem to be fraught with scandals and crimes. You hear of Bitcoin being used to buy drugs and all sorts of things. Yeah.
And there's a lot of scams out there at the moment. And, they're just... there's a lot of cleaning up that needs to be done, and it's starting to happen. The SEC is starting to do that, and like I invite that because it's going to clean up the industry. There's also a lot of crime that happens with US dollars, and New Zealand dollars.
Sure.
It's kind of criminals will find a way.
And if but it is regulated, like if you...
Absolutely, absolutely, and I think there should be more regulation around it. It's
okay. As an investor, how do you know? Like, how do you have confidence if you're buying some cryptocurrency that you're not partaking in basically a criminal activity? You're not supporting it.
So I actually asked myself this question a little while ago because I sort of thought, hey, if these are connected to criminal activities, it's not something that I support, right? And then I also realized at the same time that if financial institutions and the private sector is going to get on board with public blockchain technologies, they don't want their transactions to be completely open and transparent. So with Monero and Zcash, who are the sort of anonymous currencies at the moment, the main ones, the technology that they're actually building will enable private firms to transact on a public blockchain, which is the equivalent of saying that these private companies will have the ability to use the internet for their business, and be able to have those transactions private. So there's actually a massive value add in having privacy around a currency, cryptocurrency.
Sure.
Yeah.
Okay. Look, if someone's listening to this or they've been doing a bit of research into crypto and they're keen, they want to get involved and gamble some money, I'm going to use that word, gamble. What are some tips for them? How do they get started and what platform should they be looking at? Yeah,
look, there's a lot of ways to purchase Bitcoin. There's even Bitcoin meetups, and you can go along there, and there'll be people willing to do an exchange there.
So physically?
Yeah. There's also platforms, international platforms, where you can enter credit card details, and they'll go through the KYC process. You've got to validate your address and proof of identity and that sort of thing. And
KYC being know your client?
Yeah. So, it's starting to sort of, everyone's kind of scared about what the SEC is doing, no one wants to, the people who are doing this legitimately, they don't want to go to jail. So they're very happy to follow the rules and do what they need to.
So there are a couple of New Zealand platforms that you can buy cryptocurrencies using New Zealand dollars?
Correct.
Yes.
Yeah.
So they're smaller outfits. Would you recommend people using those?
Yeah, absolutely. I haven't used them myself, so I would be reluctant to say, do what I've done and go and do that, because I haven't done it myself.
Which ones have you used, if you don't?
So I've purchased from people directly.
Okay.
And that's just kind of a benefit of being involved in the whole space, I suppose.
Yeah, it's a community, right?
Absolutely, and everyone's very friendly and very willing to help each other, and because we're all just learning this together.
Okay. Finally, Scott, banks. That's been an issue. Banks don't really want to be involved in risky activity because of the anti-money laundering legislation they need to comply with. So banks have been known to close people's accounts who are trading a lot in cryptocurrency. What advice do you have to people to avoid them having the bank accounts closed? Yeah,
it's an interesting one. So a New Zealand-based cryptocurrency group that I'm a part of, the guy behind that actually got in touch with the IRD and said, hey, I've made a lot of money from cryptocurrency, and I want to make sure that I'm taxed appropriately, and I don't want to get into trouble for this. And basically the response was, we have no idea how to treat these things. Because they are so foreign to them. So I think, yes, the banks will and have closed down people's bank accounts, and that normally happens, if you're going to be transacting a lot back into New Zealand dollars and your bank account goes up by a large sum overnight, that's going to raise some questions. So at the same time, there's also crypto pay cards, which are tied to Visa. So you can load them with cryptocurrencies and you can spend them as you would a Visa card. So.
Okay, it's an option to consider.
It's an option, yeah. Myself, I try to sort of stay away from anything that's going to get me into trouble as much as I can. So,
sure.
Yeah.
All right, Scott, hey, thank you so much for coming in and talking to us. This is a huge area, and I think we've probably just scraped the surface.
Absolutely.
But, so much room for people to go off and do their own research and that sort of thing if they are interested. So thank you for coming in.
No problem. Thank you.
And I'm Janae Tibbs-Shirani from interest.co.nz.